Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This video for Tuesday, December 6th, 2011 is brought to you by RealTick. All right, guys, again, let's take a look at the charts here. Markets on the daily chart, you can see it's a little bit of a pause day, and that's exactly what you're seeing here. Pause. Spiders are actually down 1 penny on the day, so it really is an exact pause day. Now, the key is whether or not we're going to go higher or lower, and how do you know? And let's take a look at the intraday chart and decide what we're seeing here. First off, you have to say that this is a little bit of an inside day inside of yesterday's down move. Short term, that may tell us towards the end of the day there may be a little selling that comes in. Now, one thing I do know that's going on in the news is tomorrow we will get a word out from Merkel and Sarkozy in relation to an agreement on possibly how to go forward with the European Union and the Euro. And that'll be interesting to watch, and it could be telling us that maybe you see a little bit of selling towards the end of the day today. However, if we zoom out on the charts, and again, we go from just, okay, well, what happens towards the end of today, and we zoom out, then what you have to say is you have a larger bullish consolidation pattern, which means if over the next multiple days, you may start to head a little bit higher. All right, so we're going to continue to watch and see how this plays out. But right now, short term, I'm seeing a little bit of a bearish consolidation, which could be the rest of today, maybe into early tomorrow. And then if we go out further than tomorrow, I think that's where you have a little bit of a more of a bullish curb to this market. Now, again, just taking a look at the volume today, it's dead. I mean, there's no other way to describe it. We've done 91 million, folks, and it's after 2 o'clock, 2 p.m. Eastern time here, less than 2 hours left, and 91 million on the SPY. That's probably on pace to be one of the lighter days of the entire year. And again, the whole reasoning is because you're waiting for this news out of Europe. Everyone's on pins and needles. As long as nothing's coming out of Europe, the markets here in the U.S. are very, very quiet. All right, what I want to do today is, since there's not much to discuss on an intraday basis of this market, let's take a look at some stocks. Let's take a look at stocks that could be trades. Let's set ourselves up. All right, as you guys know, yesterday I put out the hidden gem, which is part of the research center here at InTheMoneyStocks.com. And again, we nailed that 30+% gain just in one day alone. Today it's consolidating, getting ready to blast higher. And again, we'll take a look at SCEI today, which again is down a little bit, but take a look at this beautiful daily inside bar here. This is the daily chart. I gave it out yesterday. This was the move you got, which again was over 30% move up. And then again, today, a little bit of consolidation. As long as you see this consolidation stay inside of the green candle, that's bullish consolidation and means this SCEI probably does head higher over the next couple weeks to a couple months. And again, my short-term target over the next 6 months actually has about 50 to 100% gain on this easily in terms of a possible move up. So we'll be watching for that. Now, a couple other charts out there I want to take a look at. First off, JP Morgan. Financials have led the market up over the last week or so. I mean, there's no doubt about it that JPM was a leader. If we zoom out on the charts, look at this move up on JPM going back to last week. Just a powerhouse move. Today, the stock is weaker, though, and that is keeping the markets in check a little bit. This is a Dow component as well. And again, you can see the downside here down about 50 cents. Not a huge pullback, but it is a pullback. The other thing you want to note here is you may have a little in spirit of head and shoulder pattern. And head and shoulder patterns are bearish patterns. And one thing you can see right here, here's a shoulder, here's your head, and here's a shoulder right here. Now, what's important is the neckline, and the neckline is a beautiful line right here. Let's zoom in a little bit so we can take a closer look. Connect the pivot line from the neckline here, kind of the armpit, if you will, of the head and shoulders, to right here, and that's your breakdown line. And notice how JPM is hammering but has not broken. Until it breaks, this head and shoulders is not in play. If it does break, it could yield as much as a $2 drop on JP Morgan below, heading south. All right, so again, just something to watch. I want you guys to be aware, utilize this video for educational purposes, but also give you guys a couple options in terms of trades. And remember, folks, if you want to get involved here at In The Money Stocks, if you want to step your game up, if you want to make money on every move up and down in the markets, no matter what is going on out there, as we avoid the hype and focus on the charts, we teach you our proprietary methodology. I'll give you my exact swing trades via the Research Center, hot charts, and alerts. All you have to do is take the 7-day free trial to the Research Center. And again, that's at InTheMoneyStocks.com. If you want to get involved a little bit more so, intraday trading, intraday analysis, then you take the 7-day free trial to the intraday stock chat. All right. Now, again, let's take a look at a couple other stocks that I'm eyeing as possible plays. One is First Solar. First Solar down a buck 55 today. You might say, well, that doesn't sound too pretty, but the fact is, it had a ginormous move off the lows here. The stock went from $40 to about $50. It's now consolidating. My analysis is showing a 50% retrace around the $45 level, plus you have the 20 moving average. Assuming First Solar holds tomorrow the 45 level and kind of is right around there, this becomes a possible long play for upside. Upside would take you to the 50 moving average, which would be around $51. All right, so very little possible good setup here on First Solar. Another stock I'm eyeing very closely, which is a beaten down one. This is a little bit more risky. This is DMND, Diamond Foods. Diamond Foods made a pivot low, had a nice move up, and it's kind of consolidating and pulling back, but it still has not taken out this pivot low yet. As long as this low does not get taken out, which is at around $27 on a closing basis, this is very attractive to me. Now, this is a high-risk play, though. Be aware. This is a very, very high-risk play, because they're dealing with some accounting issues, they're redoing and looking at their books and so forth. Ultimately, I do think they will come through it, but the question is, does it take another dump before then? It's down from $96 per share I guess this was back in September, so it's had a huge, huge fall. It's very oversold. Risk reward, I still favor the upside. Upside could be huge if it does get some good news that their accounting analysis comes through relatively clean. But again, definitely carry some risk with it, so don't be devoid of that. All right, let's take a look at a couple other charts out there. How's Apple performing today? Apple's down $1.86. Little bit of a pause, pullback, but you can still see Apple still holding up the 50 moving average right here. Even if Apple pulled back to the 20, I would still give this a neutral upside bias right now. Believe it or not, the 20 would be a perfect little area for looking for another pop on the stock, in my opinion, as it would be a good retrace as well. But that's going to be support there, the 20 moving average. You did confirm above the 20, so that's technically based on our proprietary techniques. That's the level you're watching. Let's take a look at MasterCard. Now, MasterCard's a thing of beauty, guys. I want to tell you why. MasterCard I gave out as a swing trade short at $383.70. That was the trigger price. It triggered on Monday, and ultimately we are already in the money about $12 plus dollars. $12, $13 on this stock on the short side. And the markets really haven't pulled back that much. And the reason why is because ultimately when you find a chart of a stock that looks bearish or bullish, if you read it correctly, you will make money regardless of what the market does. It's all about reading it correctly. And the beauty of this is that, we nailed the top here again. We were long last week and make huge amounts of money. Here's a short opportunity this week, which we're making good money on. It doesn't matter which way the market goes because we're neither bulls nor bears. What we do is we have a proprietary methodology we teach you, and utilizing that, you will literally be on the right side of the market pretty much every single time, making money when it goes up, when it goes down. You'll outperform institutions like Goldman Sachs in terms of how many trades you can win, how many swing trades or investments you'll be on the right side of compared to what they do. Now, they'll make money because they have billions, if not trillions, behind them. But you out there, maybe you have a million, maybe you have a couple million, 10 million, 20 million, who knows? Maybe you only have $5,000. You play it right, you'll make more money return-wise percentage than the institutions out there will. And that's utilizing the In the Money Stocks methodology, folks, which, again, we're offering that 7-day free trial here to the Research Center and to the Intraday Stock Chat, and that's inthemoneystocks.com. Alrighty, guys. So that's a great little trade right there. I love the setup there. I think it's going to continue to come down. What I even like more about it is that we nailed the top on the short. Kramer comes out and pumps it yesterday, and it still goes down because we were right, because we read the chart. We utilized our proprietary techniques, not some arbitrary, oh, I like it or I don't. Emotion is crap. Right, you don't want to get involved with emotion. You want to keep that out of your trading. You want to use proprietary techniques here at inthemoneystocks.com and continue to make money day in, day out. All right, guys, have a great afternoon. Come join us here at inthemoneystocks.com. Take the 7-day free trial. And again, step up your game. No time like the present. Let's make some money. Take care.